Thanks for joining David, myself, and Kevin on our regular educational video. As always, there's lots of things going on in the market right now, so if you have any questions, please don't hesitate to call any one of the three of us. David and Kevin today are going to be talking about property tax deferral. It's timely because you should be getting your property tax notice of assessment pretty soon. So the two of them are going to go over the pluses and minuses. And again, as always, if you have any questions, don't hesitate to give us a call.
All right, well, nice to have a new face joining us on our video series. Welcome, Kevin. Can you tell us a little bit about the program for deferring property taxes?
Sure. In British Columbia, there are two property tax deferral programs to defer the taxes on your principal residence. There's a regular program and a families with children's program. Under the regular program, you'd have to be age 55 years or older, or a surviving spouse, a widow or widower, or a person with a disability. Under the families with children's program, you would need to be a parent, a step-parent, or someone who's financially responsible for a child. In either program, you must always maintain a minimum of 25% equity in the assessed value of your property, and that property needs to be your principal residence. Once you elect to defer your property taxes, you will start to receive an annual statement showing a running balance of the total, the interest rate, any annual fees you're being charged, and other important information. How it works is the municipality that you reside in essentially pays your annual tax bill, and then they put a restrictive lien against your home, meaning that when you go to sell your home or you pass away, that loan would need to be paid back before your estate can access any residual proceeds in the value of your home.
That's great, Kevin. Are there any costs involved with deferring your property taxes?
There are. Under the regular program, there's a $60 setup fee along with a $10 annual renewal fee. Interest is charged at prime rate minus 2%. Currently, prime rate is 2.45%, so after the 2% reduction, you'd be paying 0.45% interest. Now, that interest rate will go up as prime rate increases, which is currently happening as the Bank of Canada hikes interest rates. However, even if prime rate is increased to, say, 5%, after the reduction, you would only be paying a 3% interest rate. Now, for the families with children program, they are being charged at prime rate, which again is currently 2.45%. The other thing to keep in mind is that this interest is simple interest and not compound interest under the property tax deferral program in British Columbia. Now, simple interest means you're not paying interest on top of interest as you would in, say, a regular loan like a mortgage or a credit card, which is based off of compound interest.
Yeah, so it's definitely advantageous. In terms of what we typically recommend for clients is, I've not seen a lot of families use the program because typically a lot of families have a mortgage on their property, like families with people with children. They're earlier in the life cycle, and it's very difficult to defer your property taxes if you do have a mortgage on the property. So in the context of today's video, we're more talking to the retirees or people approaching retirement. Property tax deferral can be really useful for people who have retired. Again, you only have to be 55 years or older in British Columbia to access the program. So if you're somebody who is retired, has an annual property tax bill of, say, $4,000, $5,000, $6,000 a year, that's a decent little chunk of change that you can actually defer at a very attractive interest rate, and that can help you boost your cash flow in retirement in addition to your pensions and your investment incomes. The other thing that we see people using it for is, again, because you only have to be 55 or older, people who are still in the workforce may elect to defer their property taxes if they've got their mortgage paid off already. They're 55, 56, they want to work a number more years. It's a way that you can defer a cost and reallocate that cost into your retirement savings, your RSP, for instance. Most people are typically earning their largest incomes later on in their career, and if they could free up a little extra cash flow to put into the RSP, and then when they do eventually retire, maybe split that income with a spouse, it can be a pretty good strategy to use. The other thing we see people doing property tax deferral with is just plain and simply wanting to accumulate as much wealth as possible to pass on to the next generation. So a lot of times people who have the net worth or have the assets and income to pay their property tax may just say, well, I don't want to incur a debt when I can just easily pay it anyways. What's the point? And that may be true, but sometimes there's good debts to take on, and property tax deferral, like Kevin said, it's simple interest, so it doesn't compound against you like a normal loan, and also it's prime minus 2%. You can't get that rate anywhere else. You could talk to the best mortgage broker and no one's offering prime minus 2% right now. So it's the best interest rate you can get in this market pretty much. Like Kevin said, right now it's 0.45%. So it's next to nothing to defer your property taxes. But if we look at an example and we use a less advantageous interest rate, let's say that the interest rate that the property tax deferral program is going to charge 3%, just to be conservative. In this scenario, if you began deferring your property taxes at age 65 and your property taxes are $5,000 a year, and you're able to invest that money in a tax-free savings account, for instance, from age 65 to 90, your TFSA would accumulate a value of $313,529 with a 6% rate of return by age 90. Your total balance owing for property taxes under this scenario at a 3% interest rate would be $132,588 at age 90. So this would still leave you and your heirs with a net profit of $180,941 at age 90. Now, Kevin, there might be some reasons people might not want to defer their property taxes, or in instances where it may not be suitable. One of those obviously is, like we said, if you do have an outstanding mortgage or home equity line of credit registered against your property, you'd want to check with your bank or your lender before actually applying to defer your property taxes, because most banks don't want another lien placed against your property outside of their own. They may not notice even for a year or two, but eventually they may check the title of the property and notice that someone else has a charge against it, in this case the municipality, and they may just unilaterally use that as an excuse to change the terms of your loan, maybe charge you a higher interest rate, or they may demand that you just pay off the property tax deferral. So if you do have a mortgage, it may not be an option for you to defer your property taxes, but you'd want to check with your bank first. The other thing is, if you're someone who's going to defer property taxes, not simply just to boost your lifestyle, but if you're wanting to actually turn around and invest it, you do have to be willing to invest it in the markets and the stock markets, because you want to generate over a long period of time a return that sufficiently exceeds the interest rate that you're paying. If you're just deferring property tax to turn around and save it in a term deposit, you'll probably still make a little bit of money, because the spread between a 1-year term deposit rate and the interest rate that they're charging you'll still make some money, but it's not going to be as lucrative as the example that we showed, where you're getting a 6% average rate of return and being charged 3% interest, for example.
Yeah.
But yeah, hopefully you guys found today's video useful. It is a great program that's not available across Canada. We're actually in a very fortunate position in British Columbia with this program. Most other provinces, you have to wait till 65, not 55. Most other provinces, you also have to be like a low income senior. In BC, they don't look at your income at all. And also the interest rates charged in BC are very attractive compared to other provinces. So for retirees, especially looking to boost their cash flow a little bit, now's a great time to consider this strategy if you haven't already. And your property taxes are due, I believe, on July 4th this year. So a great time to look into this program and maybe take action to start deferring your taxes.
Yeah.
Take care.